Wall Street's three major stock indexes closed lower Thursday, with bank stocks creating the biggest drag, as investors worried that Friday's jobs report could spur aggressive interest rate hikes by the Federal Reserve. Fed Chair Jerome Powell this week exacerbated those concerns as he highlighted the battle with high inflation during his congressional testimony. The Dow dropped 1 2/3%, the Nasdaq fell more than 2%, and the S&P 500 slid nearly 1.9%. All the S&P's 11 major industry sectors ended the session lower. The report on non-farm payrolls from February is expected to show job gains that are less than half of the surprisingly strong numbers from January. However, Kevin Mon, President and Chief Investment Officer with Henyon and Walsh Asset Management, says a better-than-expected result could lead the central bank to hike rates more frequently this year.
We saw a dramatic jump in January above 500,000. Now estimates are looking for a gain of around 225,000 in February. If it's anything north of that number, once again, that will lead investors to believe that the Fed may need to turn up the pace of their interest rate hikes and maybe even raise 3 additional times in 2023, as opposed to just 2 times, as many investors, including myself, believed prior to this week.
Traders are also looking for the size of interest rate increases to rise. They put the chances of a half-point move at the March meeting at 60%, up from half that before Powell's testimony. Stocks making big moves Thursday included SVB Financial Group, which plunged 60% after the lender slashed its 2023 outlook and launched a share sale to shore up its balance sheet. Also, General Electric, which climbed 5% as the industrial conglomerate reiterated its 2023 earnings forecast.
Hugo Boss shares fell out of fashion with investors Thursday. Its stock price was down as much as 4% after the fashion house forecast slower sales and earnings growth this year. The luxury group faces a tougher 12 months ahead after it rode the wave of a brand revamp last year. The firm sees mid-single-digit percentage growth in annual sales in 2023. It also forecast an operating profit of up to $396 million. That's a contrast to last year, when sales rose more than a quarter, while operating earnings grew almost a half. Investors were also worried China's reopening would only provide a limited boost. That, as Hugo Boss does not have a major presence in the country. Chinese sales made up just 6% of group sales in 2022. But CEO Daniel Grieder said he was very confident Hugo Boss could grow in China. He said he saw upscale opportunities with a lot of upside in Asia as a whole.